I've been thinking a lot about the early September example when you also had a market that seemed overstretched, when we have big cap tech names that are still kind of sideways, if not lower since then, and wondering, could a reset right now be one that happens beneath the surface as opposed to one that has the whole market down 10%?
Yeah, Kelly, I think you're right. I think that's a big risk for the markets here. I think, if you look at we look at profits, liquidity, and sentiment at RBA, and the profit story in the near term, clearly there's a lot of risk. But if you look 6 to 12 months out, that story is looking better. Liquidity is looking very good. Policymakers over the next couple of weeks are likely to provide even more, reason for optimism in terms of support. So then the real issue here, the big risk for the markets, is that clearly, sentiment and valuation have run a bit very quickly over the last few months. But if you're worried about sentiment and valuation, to your point, then you can look at a clear part of the market where those elevated valuations and popularity and crowding exists, and it's not in the widespread market. So I think that you can have an opportunity to invest in a lot of these unfavored names and still do very well. I mean, if you think about 2000, 2001, not that this is 2000, 2001, but actually small cap value stocks were up like 40%. Over that period. So you can have gains in some of these areas while there's an overall rotation happening.
How long, so Dan, let's say, because I know you guys are on the side of saying, maybe now's the time to take profits in your growth stocks and rotate into some of these other names. I mean, how long can that narrative run? I've seen some like Andrew Wellington yesterday who said, this could be an 8.5-year kind of value cycle. Others seem to be thinking about this more as maybe a couple of months repositioning. What are you thinking?
I think there's a cyclical story here, and there's a secular story. And I think the cyclical story is that really this is nothing that's very specific to this cycle. This is true in most profit cycles, is that when the profit cycle is looking like it's going to recover, you want to own the beneficiaries of that recovery. So tech, to their credit, has done very well this year, and it's been rewarded for that outperformance in terms of profits. But as you look for the next 12 to 18 months, that story is going to reverse, and a lot of that room to see profits boom over the next 12 to 18 months, that's in sort of these value cyclical areas of the market. That's the cyclical story. But if you think about over the next 10 years, then the number one driver of that is probably going to be current positioning, current sentiment, and current valuations. And if you look at any of those three, they're clearly supporting, those value names, particularly not just in the U.S., but outside the U.S., and particularly in small caps as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.